In today's video, we will be looking at Standard 1.4, Managing Your Income, from the Passport to Financial Literacy Standard 1, Earning Income. A well-designed budget is the best way for you to reach your goals and achieve financial independence without having to sacrifice all of life's pleasures. Budgeting means analyzing what you have coming in and then developing a reasonable and goal-oriented plan for what goes out. Though your budget should be as unique as you are, there is a common rule. Expenses should never exceed income. It should also be livable, flexible enough to allow for some changes, but not so loose as to be ineffective. Essentially, a budget is a tool to make the most out of your money. What does a budget look like? Remember that a budget is nothing more than a spending and savings plan. You can create it with a pen and paper or with a computer spreadsheet. Whatever shape it takes, your personal budget should include your income, expenses, and action items. Begin with income, as it will determine what you can afford to spend and save each month. If you work a job that pays you regularly, such as every week or 2 weeks, you can consider that as a fixed income source so long as you keep that job. If you work overtime hours, include the extra income only if you are absolutely sure that it will continue. Bonuses are also problematic when estimating income for the purposes of a budget. Include them only if they are guaranteed. If you are self-employed or your income fluctuates because of commissions or seasonal work, you may have some challenges estimating your income exactly. And in this case, use the previous year's income as a base and estimate whether you think you will be earning more or less. When developing the expense section, you should have 2 columns to work with, one for what you have been spending your money on and the other for proposed spending. Evaluate your cash flow by listing all of your expenses in the current column. Make sure you include everything. Many well-intentioned plans are tripped up by not accounting for such unexpected expenses as car repairs or veterinary bills. A workable budget makes room for the financial outlays that arise throughout the year. This is why an emergency account should be part of your budget. Some essential expenses will be fixed, the same amount every month, such as your rent, while others will be variable. For example, your gas and electric bill may be more or less expensive based on the season. For those bills that fluctuate, determine an average by totaling what has typically cost you for the year and then divide that amount by 12 months. The last step to take before setting up your budget is to gain an accurate understanding of where you are spending your money every month. Ever wonder how the $40 ATM fast cash disappeared so quickly without any memory of where it went? An accurate budget depends on first being highly aware of every purchase you make. Remember, your budget is the most important tool you have to manage resources and achieve your goals. Your budget should include both fixed and variable income and expenses, and your budget should be flexible to meet your needs and reviewed at least annually. And the most important rule of budgeting, expenses should never exceed income.